Hi, this is Lara at Elliott Wave Stock Market with your weekly gold analysis done on Wednesday 10th of July. I'm recording this video now nearly 11 PM in the evening New York time, Wednesday the 10th. At the daily chart level, last week's analysis expected choppy, overlapping, generally trending upwards movement and the continuation of a fourth wave correction for gold, which is pretty much what we've got for the last week. I'm expecting we're in a fourth wave correction at intermediate degree, which began down here, and it's probably going to find some resistance at the upper edge of this parallel channel drawn on the daily chart. It's too early to say yet what possible structure may be unfolding for intermediate wave 4, and there are 13 possible corrective structures it can take. There's a lot of possible variation, and for the next few weeks the analysis is going to have to change with changing market conditions. Draw this parallel channel from the low of intermediate wave 1, which is now off to the left of the chart, to this low here of intermediate wave 3. Place a parallel copy up on the highs here of these movements up here to contain all of this movement for primary wave C. Intermediate wave 2 was a sharp zigzag correction lasting 3 weeks. Given the guideline of alternation, I'll expect intermediate wave 4 to be a shallow sideways moving flat triangle or combination most likely to end about the 0.236 or 0.382 Fibonacci ratios of intermediate wave 3 down. So these are our initial expectations for around about where upwards movement may end. When we have more structure within this fourth wave and we can tell which of the 13 possible corrective structures it may be taking, we can use the ratios between A and C to try and calculate a more accurate target for it to end. We cannot do that yet. Intermediate wave 4 may not move into intermediate wave 1 price territory. Movement above 1672.77 will invalidate this wave count. At this stage, the target for primary C will remain the same. It will reach 1.618, the length of primary A at 1151. But when we know where the fourth wave has ended within it, we can add to this target calculation at another wave degree as well, so it may widen to a small zone or it may change in the next few weeks. Let's have a look at the start of this fourth wave correction here on the hourly chart. This point up here, so far we have 5, 3, and the next 5 up is unfolding. I'm labelling this as a possible zigzag for an A wave because the most likely structure for this fourth wave correction will be a flat correction, which requires the A wave to subdivide as a 3. It could also be a zigzag, or it could be a double, and the first structure in the double could be a zigzag. We have to be flexible with analysis over the next few weeks and consider all these different possibilities for the fourth wave. At this stage, the first target for minute wave C will be 1296, where it would reach equality in length with minute wave A. If, when price gets up there, and it's pretty close now, if it gets up to that point and the structure is either incomplete or the price keeps on going up through the first target, then we'll use the second target. At 1349, minute wave C would reach 1.618, the length of minute wave A. Also, look out for upwards movement to find resistance at the upper edge of this parallel channel drawn here around this possible unfolding zigzag. Draw it from the start of minute A to the end of B, place a parallel copy on the high of A. That may be where upwards movement finds resistance about one of these targets, and that may be where the next movement down is initiated. If the upper edge of this channel is breached strongly with upwards movement, then I'd expect that this is not a C wave, it may be a third wave, and minor wave A may be unfolding as a 5-wave impulse. It's most likely to unfold as a 3 though, because the fourth wave is most likely to be a flat or a triangle. So when minor wave A is a completed 3, we'll know it's a completed 3 when we see movement below 1267.60. If price moves back into this price territory I've labelled minute wave A, then downwards movement cannot be a fourth wave correction within an unfolding impulse, and so the upwards movement would be confirmed as over as a 3-wave zigzag. So if we see a bit more upwards movement and then price turns around and moves below this price point, then you may expect it to keep going lower for another few days probably, to where probably minor wave B would reach 90% the length of minor wave A. If downwards movement fails to reach 90% the length of minor wave A, then another structural possibility for the fourth wave would be a double zigzag or double combination. X waves do not have to be 90% the length of the first structure in the double or triple. What's most likely though is the fourth wave is going to be a flat correction, and that's how I'm going to label it because it's the most common structure expected here given alternation with 2. So I'd expect the next downwards movement to most likely unfold as a 3, be 90% the length of A, and actually be quite likely to make a new low beyond the start of minor wave 4, because the most common type of flat is an expanded flat, and that requires the B wave to be a 105% length of the A wave, requiring a new price extreme. When the next 3 down is complete, we'll expect a 5 up, most likely to probably complete a flat for the fourth wave. At that stage, we'll also have to consider the possibility of a double, a triple, or a triangle. So there are so many possible structures at this early stage, it's impossible to tell which one is definitely unfolding in this fourth wave position. What we can say is most likely is that the first upwards wave is going to subdivide as a 3, and then the next downwards movement will also subdivide as a 3 and is quite likely to make a new low. You can use that confirmation point on the hourly chart and the channel on the hourly chart as guidance as to what's going to happen next. That's all for me today with your gold analysis, and I hope that everybody had a fabulous week.